real key pivot is going to be what happens with the BRICS. If I'm wrong and it's just another dull meeting and only a handful of countries join and there's no real announcement of anything of a real advancement, then I'll probably have to say that, maybe that's going to temper or peak gold and silver at that time. But everything and all the meetings that they're having and all the things that people are saying and doing to understand what's really transpiring, I think all point to a higher gold and silver price as we go through the rest of the year.
In today's market recaps, a silver price analysis, silver continues battling higher within descending channel. Silver is recovering within a falling channel. It has met tough resistance at the level of the 50 and 100 period SMAs on the 4-hour chart. There are bullish signs, but a breakout of the channel would be a prerequisite for a more confident stance. Silver continues recovering within a descending channel. The precious metal found support at the June 26th and 13 lows around 26.88. Its first attempt to break above the cluster of moving averages in the mid-2940 failed, but after its pullback on July 1st, it has started creeping higher again. It is now debatable whether silver is still in a bearish short-term trend, which means there is no longer a downside bias. However, it is in a falling channel, which does add a bearish tone to the charts. If silver continues recovering and breaks on a closing basis above the 50 and 100 SMAs, however, it would indicate a continuation higher to the upper channel line at around 29.90s. This would be a critical crossroads for the pair. It is also a major resistance level at the top of a 4-year consolidation zone. A decisive break above would indicate the start of a new short-term uptrend. Silver temporarily broke out of the top of the falling channel on June 20th, and although it quickly fell back, the fact it breached the integrity of the channel, albeit temporarily, indicates the upper channel line has been weakened and is more likely to give way again. This also adds a slightly bullish note to the charts. Now we'll show you the best clips of the latest interview. But first, smash the subscribe button, hit the like button if you like our recaps, and check our description for more info. Enjoy the episode.
Junior banking type of programs that they've set up, all these things now. I'll tell you this. I thought it was going to take 3 to 5 years before they introduce an outright currency or an actual known way of trading around the dollar and be involved with gold. I think the surprise this fall is we're going to get either a very good clue about that, or we're going to see the beginning of it and start to understand what the ramifications are going to be in the couple next years. It's one of the reasons why I think gold has gone up the way it's gone up, and one of the reasons why I believe it's staying up. I think one of the big surprises to people that are even bullish, or people like you that make a living day in and day out, we've been so used to gold rallying and then declining over the last years. And no one's given the credit, given this massive move that we've had, how well it's consolidated here. It's off the main. It's not discussed at all in the main street, Wall Street and all. And every time it looks like it's going to decline, boom, strong buying comes in. And I think that's because there are people aware in groups of how substantial it's going to play a role in all of this, and therefore are going to use any type of weakness in it to continue to accumulate. Look at the story that they planted. That was a plan. I've been at this 40 years. Oh, all of a sudden there's a new story. China didn't buy this month. That's the end of the gold story. How long did that work for? A few hours? A day? It just tells you how different the physical trading now is overcoming the paper market. A couple of days ago, we had that huge raid after the Friday releases. What happened? In just a matter of 4 or 5 trading days, gold made up all that loss. In my younger days, it would take months to make up losses like that. So I'm singing to the choir, and I know many of the people that watch your programs and all, but take heed and take comfort. Gold and silver. And this is something that people that go back with Grandich are surprised to hear, because it was always my second choice. But I think silver right now is acting, if not helping lead gold through this consolidation and correction. Its physical argument has changed dramatically for the better. And I would, if I was going out to do a portfolio now of physical metal, I would want equal weight now in gold and silver. And I used to at least 2 times as much gold as I would silver. So I think all in all, this consolidation and correction that we went through was healthy. And it also continues to show that physical demand is still constant because they can't take this market lower for any length of time.
In today's news recap, silver flat as subsiding inflation bolsters Fed cut case. Spot silver was little changed at the start of the week as subsiding inflation in the U.S. added to prospects that the Federal Reserve would deliver a rate cut later this year. Data showed last Friday that annual core PCE inflation had eased to 2.6% in May from 2.8% in April, while coming in line with market consensus. It has been the lowest rate since March 2021. The latest U.S. inflation data remain fresh on investors' mind, with the data coming in line with consensus and generally did little to sway current market rate expectations for the Fed's easing process to kickstart in September. IG market strategist Yeep Jun Rong was quoted as saying by Reuters, "Markets are now pricing in about a 63% chance of a Fed rate cut occurring in September, according to the CME FedWatch tool. Lower interest rates reduce the opportunity cost of holding silver, which pays no interest. Market players will next be paying close attention to remarks from Fed Chair Jerome Powell on Tuesday and to the minutes from the Federal Reserve's most recent policy meeting due out on Wednesday. Now we'll show you the best clips of the latest interview, but first, make sure you like the video, subscribe to the channel, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode."
I've had a target since around 1250 or 1300. I talk within 10 years, which would be 2025. So this goes back to 2015 of 2536 in 2025. That was my slogan back then. I think that number is very, very doable. And I think it's doable this year. I think the difference will be is we won't go as fast and we won't go as aggressive. And I think that's actually a healthier and more constructive for those, and I've never been in that camp. You know that. I've never been in the 5,000, 7,000, and some of the crazy numbers that get thrown out for gold and silver. But if you're going to believe in those numbers, the fact we got the first part done, we've corrected and consolidated without any really giving back of any real big gains. And now if we can move in a more orderly fashion up, I think that'll be combined with, I suspect, and it's just a expectation. I don't have any certainty in it, but I think the second half of this year for the stock market won't be as strong as the first. And that is good. We don't want the stock market crashing all because we want money to roll over. And I think we're seeing it. I'll tell you what's been interesting in this correction. In the last 4 weeks, I've heard from people about the metals and shares, but more about physical metals that I haven't heard from in years. And only because they went out looking again, because they haven't invested it, and they found stories about me that they reached out. Peter, I didn't even know you were still, involved in that. And I think it's quite interesting that there's an underneath level of any real weakness that's going to buy it. And I think they're not going to get as much as they like, and that'll cause them to keep raising the lid. And the real key pivot is going to be what happens with the BRICS. If I'm wrong and it's just another dull meeting and only a handful of countries join and there's no real announcement of anything of a real advancement, then I'll probably have to say that, maybe that's going to temper or peak gold and silver at that time. But everything and all the meetings that they're having and all the things that people are saying and doing. And like I said, you just have to listen to a few minutes of Andy Schectman to understand what's really transpiring. I think all point to a higher gold and silver price as we go through the rest of the year. Trillion with a T. Yearly deficits. When I was in the business, we didn't even have $1 trillion in long-term debt. Now we have yearly multiple. It's completely out of control now. To understand how significant it is, the Congressional Budget Office, and people need to know, it's probably one of the last places of semi-bipartisanship and not heavily influenced by political motives. They have upped again their target for the level of debt to now $54 trillion in less than 10 years. And I say this to people, you just explain this to me, all you bullish folks. In less than 10 years, the debt is likely to be 50 trillion. Let's just say interest rates are just 5%. That's not a lot. It's historically not a high number. That would mean that that debt rolled over or whatever is going to have interest of $2.5 trillion. The best year we ever had was 5,300 billion as income in the United States. So let's just say that raises for a few years. It even gets to $6 trillion. We don't have a bad recession or whatever the case may be. We're going to be still looking at almost half the entire income of America will go just to pay our interest.
What do you think of Peter's take? Do you think gold and silver prices will rise in the second half of the year? Are you bullish? What's your price target to take some profits? Share your journey in the comment section down below. Send a super thanks if you find our recaps valuable, and watch this video right here because you'll love it. I see you on the other side.